a 50 could also be in the price. But this is, okay, look at the market now. There's a sudden dip. I don't know if the market, yes, indeed. I think the market factored this in. 25 bips now and a sudden flip that has come into the market. Supriya Srinath is here, is at the RBI headquarters. Supriya, take it away.
So yes, I mean 25 basis points rate cut was expected along expected line 6.5%. CRR has been left unchanged at 4%. But what he has done really, and I'm going to take you to the broad takeaways, is CRR daily maintenance has been reduced to 90% from 95%. He's trying to address the liquidity situation because the liquidity shortage is going to be near zero from the present 1%, and that's a big stance change. I'm going to come to that in just a bit. MSF rate has been reduced by 25 basis points to 7%. Reverse repo has been up by 25 basis points. CPI inflation, the target continues at 5%, but there are three big factors that the governor is worried about. The first is unseasonal rainfall, the second is the recent upturn in oil prices, and the third is the seventh pay panel. In fact, according to the RBI policy this time around, it could impact inflation by about 100 to 150 basis points over a 2-year period. They've still not made up their minds exactly how and when this impact will kick in because the government is still to announce, but they expect 100 to 150 basis points impact on inflation. As far as FCNR is concerned, the RBI says it's fully covered by forward purchases. That was a point of contention. People have raised issues about it. So the 2013 September FCNR, which will mature in 2016 September, that is fully covered. RBI is keeping a very close watch on that. If you ask me, away from the rates and away from the numbers, what are the big takeaways? Number one, Governor Rajan seems to be convinced with what North Block has done. He has called the attempt to stick to fiscal consolidation a commendable exercise. That's point number one. Point number two, he's actually moving beyond interest rate cuts to do his bit of boosting growth, which is to increase liquidity in the system, and that's point number three. I think there's a huge change in stance from the RBI's point of view. The RBI is moving away from the age-old wisdom or the cornerstone of its policy, which was always to create shortage or a liquidity deficit in the system. He's talking about a liquidity deficit that is likely to be reduced to zero from the present 1%. That's a huge, huge change in the stance of the RBI. Like I said earlier, inflation projections continue to be at 5% for this financial year, but he's worried about oil, he's worried about monsoon, and he's also extremely worried about the 7th pay panel recommendations. But like I said, the big takeaway is he's convinced with what the government is doing, and he's doing his bit to increase liquidity in the system, almost addressing this outside and moving away from an interest rate cut to do his bit for growth.
Thanks a lot for that, Supriya. So those are the key takeaways from the policy. Supriya will have to go back to the RBI commentary as well. But let me get in our experts on board to talk about their take on this policy statement. And Nilesh Shah is with us as well. Nilesh, come to you first. 25 bips on expected lines, no surprises, will be accommodative, worried about inflation due to the 7th pay commission. Your initial thoughts?
I think the 25 basis point rate cut is as per the expectations of the market, but certainly market had priced in on both debt and equity side little more than 25 basis point, more of a prayer and a wish rather than expectation. The rally in both the equity and debt market ahead of the policy probably means that now, as the policy is in front of us, they will consolidate at current level, and then depending upon the guidance and the liquidity, we will see how both this market starts moving forward.
Okay. Before I go to Mr. VG Kannan, Maithili, your initial thoughts as well. I mean, Supriya elaborately gave out the key takeaways as well. What did you make out of those statements?
Well, the 25 basis points was very much entirely in character both of the governor as well as the Reserve Bank of India, because broadly conservative, and moreover, particularly since they have achieved I would call fairly remarkable success on the inflation front. I don't suppose the bank would want to risk it by giving an aggressive cut in interest in the repo rate just in case it triggers inflation once again, particularly since the bank seems to be concerned about the 7th pay commission report saying that it will could lead to an inflation increase of over 100 to 150 basis points, which mind you is quite different from what what Dr. Pranab said, because he seemed to think the 7th Pay Commission recommendations, the money that is paid out will largely be saved rather than spent. So I really do not know here. The RBI seems to have a slightly different view. They do see a threat to inflation from there, so they played understandably conservative. On the liquidity front, from what I understood from what Supriya said, she said the RBI would see that the liquidity deficit is brought down to zero. Now, we don't have any details as yet. How does the RBI intend to reduce the liquidity deficit, which is in the region of 2.2 trillion rupees on a daily basis? How does the RBI intend to reduce that to zero? On that, we don't have enough clarity. So unless the RBI also accompanies its cut in repo rate with a substantially increased issue of liquidity, I don't think we're going to see that transmission, and the promised recovery that we were hoping for just might once again be aborted, because unless we have that cut in repo rate transmitted well, yes,
right,
we have the MCLR, but unless it's also accompanied by liquidity easing,
sure,
I'm afraid the outlook is not too bright.
No, I think, and I take on board that point completely, but let me get in initial thoughts because we have about 4 minutes before the Reserve Bank Governor starts speaking. Mr. Kannan, to you first. 25 bips, so nothing out of the ordinary, accommodative stance as well. What are your initial thoughts?
I think this is more or less on expected lines. I think not much of a surprise. Yes, as Nilesh was mentioning, wishful thinking of a 50 basis point, almost all the bankers, the bond dealers would have expected. But I think 25 basis point more or less factored in. And as regards liquidity, the CRR minimum maintenance per day, bringing it down to 90%, eases the situation at the banks, because hitherto, since they had to maintain very high rates, then that was causing anxiety amongst the dealers, amongst the bankers, and they used to maintain excess liquidity almost on a daily basis. This leeway will certainly help. Maybe in due course they can reduce it to even 80 or 85% as used to be there in the past. That will also ensure that the scramble for money on every day to ensure that they are in the minimum doesn't happen. As regards the FCNR, he has made a statement that the forward cover has been done for the repayment of the FCNR deposits. The only concern is the forward cover has to be delivered by the banks, and who in turn would have to take it from the corporates. With the exports actually not picking up, that could be a small area of concern. Otherwise, I think they have done a wonderful job of maintaining the rupee, as also ensuring that the inflation has come under control.
From the RBI seems to have a slightly different perspective on the outcome of the 7th Pay Commission recommendations. Would you think that the RBI is being excessively conservative? Because you seem to suggest that you didn't see much fear to inflation. You felt that most of the money would be saved post the NPS. Pranab?
I would stick with that. I think we don't recognize the fact that there's been a dramatic change in the, the life cycle income of government employees. Earlier, it used to be your pension was very well defined. You really didn't have to worry about your lifestyle dropping after retirement. Today, you do. Today, the NPS makes you extremely vulnerable to market conditions, and as a result, if you are wary, as I think most people are, given what the markets have been doing over the last couple of years, you would want to actually oversave rather than undersave. So I don't think there is any fear coming from the 7th Pay Commission at all in terms of excess demand in the system. Having said that, I think the other thing that is important is that the RBI is looking at liquidity. And
after reviewing the economic outlook and prospects, the Reserve Bank of India cut the policy rate by a further 25 basis points. This means we have cut interest rates by a total of 150 basis points since the beginning of the accommodative cycle. Our attention in recent months has turned to seeing that this large quantum of rate cuts is passed through into borrowing rates. The introduction of the marginal cost lending rate, the MCLR, since April 1st will help. Our first estimate from the 26 largest banks in the system, accounting for about 83% of activity, has been that since the last week of March, the median overnight MCLR is down by 50 basis points from the base rate and is down by 25 basis points across all tenures. This is important because it means an actual rate cut to the borrower of a further 25 to 50 basis points at least, even before today's rate cut. Put differently, policy action is significantly greater today than just another 25 basis point cut. Borrowing is now significantly cheaper and will continue to get so. To further this process, a major focus of this policy has been to address liquidity issues. After a detailed review and internal discussions, we've brought in significant refinements to our framework, including clearer differentiation between the durable liquidity needs of the system and short-term liquidity needs, indicated an intent to move closer to neutral on overall durable liquidity needs, reduced the MSF rate by 75 basis points, and increased the rate at which banks can deposit at the RBI by 25 basis points so as to narrow the interest rate corridor, reduced the minimum daily maintenance of CRR to 90%. All these measures, along with the government's actions on small savings rates, should also help continue the process of transmission. In addition to further durable liquidity provision, we have announced an open market operation, a purchase of government securities of 15,000 crores today. The monetary policy stance remains accommodative. Going forward, we will be looking for further monetary room in signs of good monsoon, further readings of low headline inflation, indications of softening in core inflation, and further evidence of transmission of rate cuts. Part B of this policy statement also has a number of reform measures, including continuing opening up of the banking sector, new market instruments such as money market futures, broadening participation in and easing access to markets, such as allowing retail customers the ability to trade GSECs and to undertake foreign exchange trades, and strengthening financial inclusion through measures such as improving the business correspondent network. Moreover, in the weeks to come, you will see a fulfillment of our past announcements, including the release of guidelines for on-tap licensing of universal banks, the start of the trading platform for priority sector lending certificates, and the introduction of mobile-to-mobile transfers through the Universal Payment Interface by NPCL. Finally, the process of cleaning up bank balance sheets is well underway, and I'm happy with the progress made thus far. My colleagues and I will now take questions.
This is Supriya Srinath from ET Now. Great to be here at your turf. But I must ask you the first question on liquidity boosting measures. A lot of people believe that you are moving beyond interest rates to do your bit for boosting growth. And there is a change in stance from the RBI. The RBI has always, in its own wisdom, believed there should be a liquidity deficit. You're talking about that being reduced to zero. Is this a conscious effort to change the stance that has been over all these years? And how worried are you about the pay panel recommendations? Because you're talking about 100 to 150 basis points impact eventually when that does roll in.
Yeah. On the first issue, which is the liquidity measures, a lot of our activity on the monetary policy front is driven by the Urjit Patel Committee report, which laid out both a change in the monetary framework as well as a change in how we deal with liquidity. Now, given the various measures that have been taken to fix the policy rate at close to the repo rate through these overnight instruments, the need to maintain the system in liquidity deficit no longer is there. Therefore, on a review of how far we had come with these overnight instruments, we decided that it was no longer necessary to maintain that significant liquidity deficit. We could move towards a more neutral position, which is what was announced today. On the issue of the 150 basis points in the Urjit, would you like to comment on that?
Thank you. Yeah. The number in the MPR of 100 to 150 basis point direct impact of the 7th Pay Commission on the headline inflation is, of course, a projection and an estimate and a mechanical exercise, essentially on account of the adjustments in the HRA that will take place eventually at both the central government level and at the state government level. We will refine those projections as more details emerge.
The thing to notice is that most likely the impact of the 7th Pay Commission on the headline inflation will be considerably less than in the previous Pay Commission, and I think even from the 5th Pay Commission, because there are going to be no arrears, and therefore the overall impact would be most likely much less than on account of the previous Pay Commissions. But that number is essentially on account of changes in housing HRA, and given the weight of housing in the CPI combined. It's noteworthy that in previous editions, the impact was felt on the CPI industrial workers, where the weight of housing was larger. It was 15.3%, and now it's about 10%. So that's the background to that projection, which may undergo change as we get more information on both the rollout and the timing. Thank you.
Morning, Governor. Lata Venkatesh from CNBC TV 18. Now you put on your Santa Claus hat for liquidity. How quickly do you expect the system to get into balance or near neutrality? Also, when you say near neutrality, would it be habitually a minor deficit, or would it be minor deficit, minor surplus? Therefore, would you be okay if call rate on certain days is below the repo rate? What would be the habitual behavior of the RBI? What is the corridor it will move in? Right. If I can add the inflation question as well, as my colleague asked you, this 150 basis points is not factored into your 5% inflation on Jan 17th. Is it factored into the MPR's 4.2% inflation in January 18? It is not. So if it is factored in, we are looking at a very different number. Then what happens to your word accommodation? How much of the 150 could be durable? Is there any estimate?
Yeah. First, on your question on liquidity, the truth is that the durable liquidity status of the economy will not affect how close the day-to-day call money rate is to the policy rate. That is determined by our short-term measures. That will continue to be determined by our short-term measures. And we hope to hug the policy rate as far as possible, with the call money rate to hug the policy rate. Whether we go into a little bit of surplus, little bit of deficit, I think that now is actually immaterial. The point is that we're moving towards that. The period over which we move depends to some extent on market conditions, depends on the flows that that come in. Remember, net foreign assets is part of the liquidity move. So we have to work it out. We have to see how this move takes place. All it means an additional, moving from a 1% deficit to about neutral, means an additional removal of deficit by about 80 to 90,000 crores. So we have to see how much the system can take. That is something we have to figure out. That's precisely what...
I'll tell you why. Because it has not been at 90,000 crore. Your deficit has been 1.5 lakh, 2.5 lakh crore. You may argue it's not enduring or durable. Yeah. But the reality is for the banks, so it has been 2.5 lakh
there
crore.
Are a couple of new, shall we say, sources of deficit that we have to look at and see how permanent they are. One is government balances have increased on average over the year. And second is, most recently, cash with the public has increased quite a bit. We have to figure out. It's about 50,000 crores in excess, 50 to 60,000 crores in excess from what we were estimating. We have to see how this plays out. So it would be, I think, premature to give you a sense of how long it will take us. Again, I mean, we're not talking quarters. We're talking a year or two. The question is whether it's a year or whether it's 2 years, by which time we get into neutrality. The 150 basis points again. You want another crack at it, or shall I take it?
No, that's... no, it's correct that neither the March 17 number nor the March 18 number, and MPR makes it very clear, does not include the impact of the Pay Commission to to what extent this is durable, we have given an estimate of the indirect effects, which are about 40 basis points. What is mechanical and just an index adjustment, most likely we would look through. What is impermanent and causes externality for the rest of the CPI, we will have to imbibe that in our projections. We have not done that exercise yet, in part because there is a fair bit of uncertainty on how this is going to evolve.
So first, the government has to come out with what actually is going to implement and when. Second, as DG said, it depends on what the second round effects are. If the second round effects are small, we can look through a level shift because it will return to the older levels later. If the second round effects are thought to be larger, we'll have to take action. By the way, on the liquidity move, there is a liquidity move anyway because we have to increase durable liquidity on a regular basis. So we will be injecting durable liquidity anyway. The question is, not only do we have to make that up, but we also have to make up the liquidity deficit. So how long we will take to make up that liquidity deficit, the additional margin, is the response I was giving to you.
प्रदीप पंड्या, CNBC आवाज़ और CNBC बाजार से। तो पहला सवाल, तो आपने जो MSF में कट किया है बजाय CRR या रेपो रेट में और डीप कट, यानी रेपो में और डीप कट करने के या CRR में एक छूट देने के, जो कि काफ़ी लोग उम्मीद कर रहे थे, तो क्या ये उतना ही कारगर होगा या ज़्यादा कारगर होगा आपको लगता है? किस तरह से दरअसल मदद मिलेगी, क्योंकि MSF पे बहुत ज़्यादा बैंक्स पैसे नहीं उठा रहे हैं, तो जो बाजार की उम्मीद थी वो कहाँ तक पूरी होगी? और दूसरा जो आपने बात कही कि कैश काफ़ी ज़्यादा पब्लिक के हाथ में आ रहा है, जैसे कि आंकड़े आपके सामने आए हैं, इसके पीछे आप क्या रीज़न देखते हैं? क्या ब्लैक मनी आपको बढ़ती हुई नज़र आ रही है, जैसे कि पनामा पेपर्स से फिर से सामने आया है, क्या आप उसको भी परस्यू कर रहे हैं? इसी कॉन्टेक्स्ट में आप देख रहे हैं इसके?
So on the first question, has the rate cut been enough? We think it is what is sensible given the uncertainties surrounding the economy right now. But I think what was important to focus on is what I started with, that because of the MCLR, we actually already have a rate cut of 25 basis points to 50 basis points before the policy. And as this winds its way through the MCLR over the next few months, you'll have more of a rate cut. So don't look at it as 25 basis points, look at the composite of measures. They all add up. And borrowing rates are coming down significantly in this economy. The effects of the liquidity measures will also help transmission, because banks have continuously been saying it's because of liquidity tightness that we can't transmit. Now we've given them enough liquidity, they have the ability to transmit even more. So my hope is we will see significantly more transmission in the next few months, and we have to be careful, therefore, that we are doing what is appropriate given the state of the economy. On the reasons for excess cash, we're trying to understand it. We see some possibility of, around election time, cash with the public does increase. You can guess as to reasons why. We also guess. And you see some, not just in the state which is going for elections, but also in neighboring states. So there's something there. We need to understand it better. But it is about 50 to 60,000 crores more than we anticipated at this time of year.
On Panama?
We are obviously part of the investigative team that is going to look into these matters. It is important to note that there are legitimate reasons also to have accounts outside. The LRS scheme allows you to take money out. We have to see what is legitimate and what is not legitimate. But that's a process of investigation that will take place.
Two questions. In the Urjit Patel committee, there is a phase 1 and there is a phase 2 with respect to the liquidity framework as well. So have we moved to phase 2? Do you look at the 14-day repo now, or will we move to the phase 2 very quickly? And my second question is on the banking side. So in schemes like SDR, so banks invoke SDR and then take over the companies, and then they probably look for solutions outside SDR. Is that even allowed, or is it violating the spirit of the SDR scheme. So,
No, let me start with the second question, SDR itself, that we have been reviewing the SDR, and we offered some revised sort of suggestions to the banks. What's important is that they take over a company when they think that genuinely management change can make a difference. But then when you take over, there's no point leaving control in the hands of the original guys while you're looking for a buyer, because that puts the company at risk during that period. So we've asked the banks to take action as soon as they invoke the SDR rather than wait. And some other measures that that have been suggested by a review of the SDR mechanism. We are seeing more buyers come into the system, but a full-fledged operation of an SDR, I think we are yet to see. So as and when that happens, we will look at that and take more lessons from this process. On the issue of phase 2, I don't remember phase 2 of the Urjit Patel committee report.
So we are still in phase 1. To give you a direct answer, what the changes that we have brought in today is a move towards creating the enabling conditions to move to phase 2, where the 14-day repo becomes the operating target.
Bijoy from Cogensis. When you had joined, at that time the corridor was broad, and at that time I'd asked you whether there is a corridor of uncertainty. Now that you have moved the corridor again from 200 to 100, is there again uncertainty, because now we don't know whether the corridor can move again? So for the market itself, do you think there is a slight corridor of uncertainty, because the corridor itself was fixed earlier? Also, sir, on the liquidity side, on the cash credit system, you were internally reviewing it, the DBR was looking at it. It has systemic liquidity implications, so any status on that?
We are still looking at this cash credit system. We have to be conscious of the fact that you don't want too many changes in the system at the same time, because the system has to adjust gradually. It's tied to our concern also about large exposures in the system, which we want to bring down. What I mean by that is large concentration of bank loans to particular groups and so on. That has to come down over time. There is no uncertainty about liquidity today. Today it is going to be a 100 basis point corridor. If tomorrow it narrows, it narrows. This doesn't affect any bank decision. I know that the corridor is 100 basis points rather than being 200 earlier. So I'm not sure this creates any uncertainty whatsoever. Why was it narrowed? Simply because we felt that over time, since our marksmanship is getting much better, we can live with a narrower corridor. And rather than, I think impose significant costs on the banking system as they find they have excess liquidity, got to deposit at 100 basis points less, or they need liquidity desperately, they got to borrow at 100 basis points more. This, in fact, makes it cheaper to make mistakes. We don't want them to make mistakes. We would like them to improve their liquidity management, which is why we haven't brought down the CRR daily rate to what they wanted, but more to what we think is appropriate. But at the same time, we want them to see the system as friendlier and pass on the rate cuts that have happened. So this is part of that process.
Is there a growth estimate for FY17 and
7.6.
7.6.
So is that under threat, you think, if the monsoon is not as good?
No, I think it was reiterated. So obviously there are risks around that growth estimate. If the monsoon is not good, I hope not. But if it is not, then obviously that will imply some reduction.
And will the RBI encourage a rollover of the FCNRB deposits that mature in September?
There is no new scheme that is intended. So if they want to roll it over, they will. Our estimate is that that scheme came with a lot of leverage, that banks were offering loans to people who invested in that scheme. And we anticipate that will not be renewed because we're not going to offer the same favorable terms again. So we are actually estimating a fairly low rollover rate on the FCNR. The good news is we are fully prepared for whatever exit takes place. And we will monitor market conditions. We think at this point that, we don't anticipate volatility, but if there is, we will deal with it.
Govardhan from the Economic Times. So there's a para on this purchase of the foreign assets and the domestic assets. Could you just explain as to maintain the durable liquidity, how it operates like?
So what we will do is estimate, over the next 12 months, how much durable liquidity we want to infuse into the economy. In other words, how much reserve money creation we want. And then regardless of short-term liquidity conditions, such as government balances, etc., we will infuse that amount of durable liquidity. So we're separating durable liquidity infusion from temporary liquidity infusion. Okay? So divide the 12-month target by 12, and that is how much we aim to infuse every month. Now that could come in two ways. Either we buy foreign exchange assets because there are a lot of flows and we want to reduce volatility in the exchange rate, or we buy domestic assets. Typically what happens is we have less choice about when the foreign assets come in, and so the residual becomes the domestic assets. So we will do both. Sometimes we'll do one. If lots of foreign assets are coming in, we may even sell domestic assets to make room for the foreign assets, consistent with our target growth rate of durable assets.
So in that context, that liquidity you said that going towards zero over the next 1 or 2 years, and at the same time the banks would be able to start lending. They don't really get together, so it's going to be a kind of a very slow trickle down in terms of the borrowing costs.
No. So one is maintaining the deficit at 1%. We are going to supply that incremental which is needed even to maintain. See, the balance sheet has to grow even to maintain the deficit at 1%. So that will supply anyway. That take for granted, we'll do it on a monthly basis. Could be through OMOs, could be through foreign asset purchases. Over and above that, we will try and narrow the gap by doing a little more than that. And Lata asked me how much time will you take to do that. We will see, but we will do more than is needed on a monthly basis to get the gap closer to zero.
Thank you.
Hello sir, this is Himadri from Bloomberg.
By the way, all of you are getting a very good education in central bank balance sheets. It's not something that most people understand, but this liquidity measure requires you to understand that very, very keenly.
Well, my question is not on liquidity though, but it's on transmission. So your read-through of the MCLRs that have been announced, transmission is still elusive. So, and deposit growth has been lowest over the decade. So is that a concern, do you think?
Well, first, I mean, 25 to 50 basis points on the MCLR, I think, is significant. Now, we will obviously look at it. We are having our people look at it to see the formulas have been adhered to. But it is a significant change from the base rate that was in operation. Remember, this is money that people can actually go out and borrow at. So I think that's positive. Sorry, what was the second question? Deposit growth, yes. Deposit growth is certainly lower than credit growth. Now, that's good news that the credit growth is picking up. One of the things you have to be careful about is all these things are measured at the old rates of inflation. And given that inflation has come down, 15–16% increase in deposit growth rates is probably not something that you could anticipate. In the last quarter, there have, however, been some developments which have sucked out deposits. For example, the issuance of tax-free bonds, the rush to get into the small savings before those rates expire and the new rates come in. And remember, the new rates are still, reasonably attractive, and therefore we need a continuation of this process to make them consistent with deposit rates. So my sense is this will take a little bit of time before deposits start coming back up, but I think that even with 9–9.5% growth, it's nothing to be sneezed at. It's reasonable growth.
Karuna, can you check if there are questions outside?
Sure. Participants on the audio bridge, if you'd like to ask a question, you may press star and 1 at this time.
speechless. Wow. Okay.
Anyone who has a question on the audio bridge may press star and one.
Plenty of questions here. We can wait. We can go to the floor and then come back.
सर अमोल देटे फ्रॉम ज़ी बिजनेस। एक सिंपल सा सवाल यह है कि जिस तरह से बड़े अकाउंट या बैड लोन्स को क्लियर करने का आरबीआई ने 2017 का टारगेट रखा है और आपने जैसे कहा कि यू आर हैप्पी विद द प्रोग्रेस विच बैंक्स आर डूइंग, किंगफिशर का एक बड़ा मामला चल रहा है और ईडी सीबीआई काफ़ी इन्वेस्टिगेशंस भी कर रही है। बाय एनी चांस क्या इन ऑर्गेनाइजेशंस ने आरबीआई से कोई संपर्क किया है स्पेसिफिकली अबाउट किंगफिशर अकाउंट, बिकॉज काफ़ी अग्रेसिवली सारी इन्वेस्टिगेटिव एजेंसीज काम कर रही है। एंड दूसरा ये सर पैराग्राफ नंबर 26 में जो आपने लिखा है बैंकिंग स्ट्रक्चर में, एनहांसिंग क्रेडिट सप्लाई थ्रू मार्केट मैकेनिज्म फॉर द लार्ज एक्सपोजर्स। सो सर इसका लार्ज एक्सपोजर का सबसे पहले डेफिनेशन क्या होगा एंड व्हाट अबाउट द स्मॉल एक्सपोजर्स?
Okay. Let me ask about the large exposure to Mr. Gandhi. I don't want to take specific names into account, but there is cooperation amongst the investigative agencies and the RBI. It is important that this kind of investigation not be done through the press. And I think when people release letters that they've issued here and there and so on, I think it does tend to create an environment which is not conducive to investigation. What we must look at in all these situations is what were the conditions under those circumstances? Were the loans given by the banks in the spirit, given the information that was known then? And be careful about hindsight being 20/20. I'll give you an example. Today we know certain sectors in the economy are weak. But there's always a statement that they will strengthen. It is a temporary weakness. Now, if banks give loans under these circumstances, if there is some forbearance that takes place, it doesn't immediately imply that there was venality, there was corruption, that this is a bad action. Okay? So one has to be very careful if 3 years from now these sectors turn out to be even worse or tend to have collapsed, that the action that was taken to support the sector at that time should not be seen with the 20/20 hindsight that comes. You have to look to see whether reasonable precautions were taken, whether reasonable judgments were made, that what a prudent man would do under those circumstances. So again and again, both the finance minister and I have said that it is important that we investigate to see the mistakes as well as criminal activity that may have taken place, but do it based on judgments that would have had to be made at that time, and don't use, today's thinking and today's information to guess at that. Otherwise, you will chill bank lending, and you will make sure that we really don't get any risk-taking in this economy by entrepreneurs or by the bankers. We need both in order to get economic growth. So that care has to be taken. What was the second question? Sorry.
Large exposure.
Large exposures. Gandhi.
Large exposure is always measured in terms of the bank's financials, basically with reference to its capital. So in the discussion paper, it will be explained more in detail, because by the standard principles which is rolled over under the Basel, what is being suggested is it should be related to the tier 1 capital. So it, depending upon bank's own capital, the exposure to a particular party or a group of parties will be determined. Yeah, this particular framework is meant for dealing with large exposure. So obviously there will be a cutoff beyond which only it will apply.
Hello, Sandrine Hastello with Bloomberg. Two quick questions. One was about the cyber thefts that we saw in Bangladesh. Did the RBI take any measures following this? I get the impression from your website you've been beefing up your cyber security. And the other side was on rural inflation, which has been quite high. Now with the focus on stimulus for the rural India, do you see any risk on inflation coming from that side?
First on cyber security, it is an important risk. It's a risk that I think across the world we still understand too little. And there are various ways of getting through cyber defenses, including through people rather than through processes or through the networks. So we have to take action on all these issues, and clearly what happened in Bangladesh is certainly a source of concern for all of us, and we have taken some measures and are continuing to understand better what actually happened so that we can further our measures. I should mention that we have identified now a leader for our cybersecurity subsidiary, and we will now start recruiting people into it, and the idea is that this would serve both the RBI as well as the system to improve the quality of cybersecurity and the strength of cybersecurity. On rural inflation, I mean, we have to remember that we've had two very severe droughts, and in fact rural wages are still quite moderate. So that would suggest that rural inflation, even though it is higher than urban inflation, that's more because of perhaps some bottlenecks and some constraints in flows and in logistics, than because the rural areas are really very buoyant. In fact, rural demand is still quite weak. So as of now, the fear that it might take off significantly is still relatively muted. And of course, abundant production of food through a good monsoon would help quell any inflation.
So Virendra Singh Gunawat from Aajtak and India Today. So पनामा पे आपने कह दिया है कि काफ़ी एजेंसीज ऑलरेडी काम कर रही है. सर जानना ही चाहेंगे इमीडिएट एक्शन आरबीआई की तरफ से क्या होगा, क्योंकि 500 इंडियंस है, भी कहा कि भी एग्जामिन करना होगा कितने एलिजिबिलिटी है कितने इलिजिटिमेट है, तो फर्दर एक्शन क्या होगा. फर्स्ट सेकेंड सर, किंगफिशर को लेकर आपने ये भी कहा स्पेसिफिकली कहा है कि एनफोर्समेंट डायरेक्टरेट ने आईडीबीआई बैंक के सीएमडी फॉर्मर सीएमडी की बयान लिया है, स्टेटमेंट लिया है. उसमें उनको ये पता चला है कि जो ड्यू डिलिजेंस होता है आईडीबीआई बैंक की तरफ से उसमें लापरवाही रही है, लेकिन उसमें ये भी पता चला है कि नॉर्मली जब लोन रिस्ट्रक्चरिंग करना होता है तो आरबीआई से परमिशन लेनी होती है.
Doing business in India, we have already highlighted that the introduction of GST will significantly bring down the transaction costs and the cost of manufacturing. Similarly, the interest rates also, we are looking at a low interest rate regime so that there is more investment both in manufacturing, infrastructure and in other areas. As you are aware, government has already kept the fiscal deficit under control. 3.9% in 15-16 and 3.5% is the target for 16-17. Inflation is low. RBI has projected an inflation of about 5% for next year. Government has also reset the small savings rates, and so under these circumstances the RBI's announcement of 25 basis points is therefore in line with the direction in which government would like the economy to move. And the banks have also, some of the banks have already reset their interest rates, taking into account the marginal cost of lending, the MCLR. They have taken that into account and done some amount of reduction of rates. Consequent to all these measures and consequent to the RBI's announcement today, the banks will perhaps need to do some more of transmission of the reduction in the policy rates by the RBI. Thank you.
Sir, a whole host of liquidity measures have also been announced today. What do you make of that? And do you think it will significantly ease the situation, liquidity situation in the market?
So just one question adding to that. So the interest rate corridor has also been shortened from 100 basis points and brought it down to 50 basis points. The difference between repo and reverse repo. What implications will it have? Why has it done that? What does it indicate?
No, I think why has RBI done that? I think RBI is best placed to reply to that. So I would not like to go into that. But with regard to liquidity, you see the government always at the end of March builds up high cash because we have huge amount of redemptions coming up in April, and also the tax collections, typically the advanced tax collections under income tax, they come around 15th of March, and also the indirect tax collection payments which come around 5th of next month. But in March, traditionally we have been taking them, the service tax and the excise duties, we have been receiving them before 31st of March. I mean, that has been the traditional pattern, and that is why the cash balances do build up at the end of the year. But if you see, about roughly 75 to 80% of the cash balance would be on account of the treasury bills, the T-bill investment by the states also, because that is the time also when the states are receiving their VAT and other revenues. So it will now even out, and with the emphasis which government is giving on evenly spreading the expenditure throughout the year, and with government's focus now, renewed focus on implementation of the various budget announcements, I think the cash balances of the government will even out in the weeks to come.
Sir, one thing, sir. RBI still maintains that private investment is weak, because they have also cited oil prices, monsoon, or your fiscal deficit, then your pay commission payout. So these are also.
I mean, many of you bank with public sector banks. Would you like that regardless? You forgot. You just forgot. It's not that you're trying to make this thing. If every time you defaulted, it was put up in public for everybody, your neighbors, your friends, relatives to see, and no reason was given, it was just put up that you're a defaulter, you might have some concerns, right? Similarly, what we are saying is the act of default happens in business. Sometimes it's not your own fault. In fact, again, I get a letter a day saying it's not our fault. Demand is weak, prices are low, there's dumping going on by foreign countries, government permissions didn't come through, Supreme Court ruling took away some of these assets because they said null and void this allocation. Variety of reasons why a project gets into trouble. To then put the promoter up for all to see that this person defaulted without details of why they defaulted, and the details sometimes are hard for a layperson to understand because they're intricate details. Are you going to go into the business of every promoter to understand why they defaulted? So we have no problem if the intent is to publish willful defaulter lists. That is where the promoter has, in the eyes of the bank, taken the bank for granted. The bank has gone through a legitimate process to declare the promoter a willful defaulter. That can be made public. In fact, some courts have prevented the banks from making those lists public. That's something that if there's a judgment along those lines, we have no problem. But we believe that simply any act of default, without understanding why, understanding the severity, etc., if it's just put out for public to consume, it may create both a loss of business as well as undue anxiety and panic, and therefore chill business activity. And after all, if you're a promoter, why would you take any risk if the slightest chance of default, your name is put up in public for shame? I don't think we want that kind of move. That was our plea to the Supreme Court, that please keep this confidential. There are elements that can be disclosed, but let us not disclose everything. Panama.
जैसा गवर्नर साहब ने आपको बताया कि पनामा पेपर के तहत में एक उच्च स्तरीय दल गठन किया गया है, जिसमें सीबीडीटी हैं, एफआईयू हैं और ईडी भी हैं, और उसमें रिजर्व बैंक की तरफ से उच्च स्तरीय प्रतिनिधित्व दिया गया। तो उसमें छानबीन में हम लोग इसमें मदद करेंगे। आप भी जैसे पढ़ा होगा कि एसआईटी जो ऑलरेडी काम कर रही है काले धंधे के ऊपर, वो भी इसके ऊपर निगरानी करने के लिए बोले हैं। इसमें जैसा गवर्नर साहब ने बताया, 2-3 मुद्दे हैं। एक तो कई जो बाहर निवेश किए हैं, लोग बाहर खाता खोले हैं, निवेश किए हैं, कई फेमा के तहत कई चीज़ परमिटेड हैं, कई चीज़ परमिटेड नहीं है, और कई चीज़ थोड़ा ग्रे एरिया है। तो वो सारे चीज़ को छानबीन किया जाएगा, देखा जाएगा कितना लेजिटिमेट है, कितना इलेजिटिमेट है। तो ये आगे जिस तरह से छानबीन होगी उससे पता चलेगी।
Thank you.
Okay, that's of course the complete lowdown from the Reserve Bank speakers on the policy statement. Governor Rajan addressing a lot of issues.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.